So I'm going to do some overall market analysis at the start of the week. It is Monday the 18th of September, currently 9:13 British Standard Time. So Euro USD, I'll be looking at it larger time frame first, monthly time frame. Again, if you have a look at the monthly time frame, that is, would you say that's definitely a buy. We've got it where we've come down into this area down here, pushed all the way up, strong candles closing near their highs. Now the previous month it did go up and did sell back down up around the 120 level. Currently this month we're beyond halfway, and we've pushed up and come back down into that area to where it's opened. So let's just have a look. Where did we open? We opened around 119.09. So we're in and around that area now as we're trading at 119.30, let's just say. So we're currently looking for buy signals on a weekly time frame. Let's just have a look. Last week was a down week, although we did retrace somewhat. So this week, where did we open this week? This week we opened at 119.20. So when the price trades above that 119.20, I'll be looking for buying opportunities because, as I've said in previous videos, weekly open is pretty much a pivot point I like. I'm not sure if it's an official pivot point, but I use it as a pivot point. If you trade above it, then I tend to take long trades. Now, we're currently trading below the 190. Hold on, let's have a look. Let's get this right. Yep, we are trading above that 119.20 level because we're at 119.30, but we're oscillating around that point. Now, if we go down to the daily, again, as you can see, pretty much it's clear we're in an uptrend. That 119.10 is a potential bouncing spot. Below that, we do have that area around the 117s on the daily, around at 117. So if we go down to the hourly, we are still, if we're trading in line with the monthly time frame and the weeklies, we are looking for buying opportunities. But if you go down to the 60-minute chart, as you've seen, we've come up to the area there around the 119.80s, and we've touched that area, sold off, came back up, tested it, sold off a bit. But we're in between these two moving averages here as price is contracting. You can expect this. I think this week we are expecting an interest rate decision on the dollar, which the markets could likely be waiting for, even though in reality I don't think anybody expects the Fed to raise rates. So if they do, it'd be a bit of a surprise. We might see a big move. But yeah, that's currently what I'm looking at. Above 119.20, I'm looking for buying opportunities. Ideally, I'd probably like to see closes above this moving average and possibly a close above that 119.80 level for a continuation up to the 120s for a further test for higher up. Let's see where it is. Where is that higher up? Whereas I was saying in previous videos, around at 123 level. 123 level. So that's currently what I'm looking for on the euro dollar. Looking for buying opportunities. Let's go. Let's move that chart back down to the 60-minute. Let's get that to the 60-minute chart. Yep, that's currently it for the euro dollar. This is just a larger market analysis, and yeah. So going to go to the pound dollar next, and go up to the higher time frame, which is the monthly. Again, we've come down into this area around the 120s, 125, had a bit of consolidation, and now we appear to be pushing up. Currently in this month, as you can see, it's a really large candle, which is bigger than the previous 4 candles at least. in terms of size. Could even say bigger than the previous 5 candles. So it is pretty much engulfing. There's that level where you mentioned last week, the 134.29 level. Well, we're quite a bit above that. Price has gone as high as 136.18. So yep, it's gone above this moving average here. So price seems to be breaking to the upside on the pound dollar. Hopefully that was messing with my mic. On the pound dollar. So we are looking for buying opportunities. We are trading above the monthly open, well above it. So if we go down to the weekly chart, let's go have a look. My most important chart. So this week, well, last week we had a really strong week, closing near the high, large candle. So today, tomorrow, we're likely to see some retracement. Because we do expect market participants to rest at some point. But again, the most important thing for me is where we are in relation to the week's open. So this week opened at 135.58. 135.58. So when we're above that, I am looking at buy signals. We're currently at 135.59, so we're pretty much around that area there. Now on a weekly time frame, over here we had the large Brexit candle that touched this 150.10, and 150.10, that's the height of that candle. So we could potentially be going up to that 130 in the medium term. Prices could retrace back down, test at 134.29. In the medium term, to the upside, we're looking at 138.66. From there, we're looking at this range here. We had a period of consolidation. So if we look at, say, 138. Where do we say? 138.50, 138.60s, 138.50s. To the, would you say the top of that range would be 147? So it's about 1,000 pips or so. Yeah, in and around that area there. Obviously, if we break beyond those areas there, we'll be looking at a test of the 150. Got to think about this moving average here before we get there, which will likely be around the 145s, somewhere between 143, 145, in and around that region there. Now, obviously, we retrace all of that. We retraced pretty much most of the losses from Brexit. So on a weekly time frame, above that 135.58, we're looking for buys. If we go down to the daily, it's going to be more clear. This is an uptrend. We had a period of consolidation here from April. We've had a test, pullback, and now we've broken out to the upside. That's on the daily chart. We had a pretty large period of consolidation there. In and around from, would you say, lower end of the range would have been that high 125s to 130. But as you've seen, we've gone to the upside. If we go down to the hourly, see where we are. Yeah, we are having a bit of a pullback here after the large move at the end of last week. So we have to see how that plays out. But we're looking for long opportunities on the pound dollar. Let's keep it as a 1 hour chart. Now we should be going over to the euro pound. Let me go over to the euro pound and see where we are. We're currently on a 60-minute time frame, but let's get it up to the monthly time frame. Now, this is a multiple time frame analysis. So we are looking to trade in the direction where the most time frames align. So if we're looking at the monthly aligning, and we want the monthly, the weekly, even in some cases the daily aligning with the trade direction we're going to take. We want to be in line with pretty much long-term traders, short-term traders. We want to be in line with the market rather than fighting against the market to increase the likelihood of the move being in our favor. Now, let's get back to the euro pound. Euro pound coming to this area here. Now we've pushed up, sold off. When was that? This is 2016 actually, around about the November period. So we're looking around Trump's election. Again, made a higher high, and currently on this month where we are, well, we are well down on the month's open. So this month we opened at 92.09, and we are currently trading. Let's have a look, see where we're currently trading. We're currently trading around 88. So if you're trading around 88 from the 92, looking at 400 points pullback, which is quite big on the euro pound. You can see by the size of the candle, it is pretty much larger than the entire body of the previous candle. And we're only just over halfway in the month, so euro is weakening against the pound strength. The pound has been pretty strong. So currently, as we're below the month's open, even though we are currently in an uptrend, it could be argued that as we are trading below the month's open, we should be looking at bearish signals, particularly if it lines up with the weekly, which we do expect. So last week we did see, which is quite interesting actually. Last week was the week where the euro sold off the most against the pound. If you look at the monthly chart, you see a large candle, but the majority of the move has been last week. Now, when you have large moves to the downside, you do get the what's some term the dead cat bounce. You do get retracement. It's kind of like the bears giving it their all, selling it down, and eventually they get a bit exhausted. Their prices retrace a bit before a move further to the downside. So currently this week, where did we open? We opened at 87.84. So anything above when price trades above the 87.84, we're looking for buy signals, but bearing in mind that we are contravening the monthly open, which previously was 92. But as we are 400 points off that, we are looking for bearish signals in that sense. So we are trading below the monthly. If we get this weekly trading below its open, we're definitely looking to load up to the short side. Even though in the long term, in the longer context, well, in larger sense, we are still in an uptrend. So cautionary trading to the downside. So we have to just be aware of that the market is currently in an uptrend, even though we are having an engulfing candle. So shorts are cautionary. Now, as you can see, we're looking at levels. Price has come down to that level there, already marked on the chart. It seems to be bouncing. So a move to because I did mention when it was higher last week, a move to 88.50s. Obviously, we've outperformed to the downside. A move up to 88.50 test, possibly even further up, and then a sell down to the 86.63. All remains possible. Now, this might be a reversal spot currently where it is, but let's see where we are, because we do have that previous resistance in and around this 88 level. Let's see where we are there. Let's see where we are. So in and around that 87.70s, we do have an area which was previous resistance. Now, like I said, we do get some retracement. We do get a bearish setup to the downside. We're likely to take it, as this could be constituted, if you look at it in a weekly time frame, as a double top, slightly higher high. but it's sold off heavily from that region around that 92.25 level. Around that 92.25 level. So if we go down to the daily, again, we've seen this come down to the 87.83. We're pulling back somewhat. We're pulling back somewhat on this daily chart, but it's more clear here. If you look at the, there's a pretty strong sell-off into the close of the week. Not a single bullish candle on the daily. We just pretty much had bearish candles, pretty large size, all the way down into this area of consolidation here, which I can provide support. So as we are, if we trade below the week's open, we're definitely taking shorts, cautionary shorts. If we do trade above the week's open, we are going to the long side, as that is in line with the larger trend. Yep, so let's go down to the 60-minute chart, which shows it obviously bullish. As you can see, we've tested the 87.83 area 3 times, and we are currently coming off it, which suggests it was a good area of horizontal support. So further retracement test of the 87.50. By the time price gets up there, we'll be looking at that 50-period moving average being up there as well, further providing some resistance. But yeah, we're just going to wait and see where we are in relation to the euro pound. I've already mentioned the levels. We'll be looking at longs and shorts. Shorts being somewhat cautionary in a sense that we're not in line with the monthly chart, but we are getting an engulfing candle, which would be a trend reversal signals, which would be a trend reversal signal. So what's my final conclusion? Let's just get a final conclusion here. Let's see. Let's get a final conclusion, because that just seems a bit... Euro pound. I did say, yep, I'm just going to use my weekly week's open as a pivot. So anything above, let's get it right. Anything above 87.84, we're looking long. Anything below, we're looking short, due to the fact that in long-term trend we are bullish, but we have getting a bearish candle form. So that's it for my euro pound position. Let's go down to the euro yen. Let's see where we are with the euro yen. Euro yen, looking at the higher time frames first. Again, look at that. We're if you look at this on the monthly chart, clearly in an uptrend. You've got your higher lows. So we've had bullish candles for at least six months now. Wow. Yeah, at least about near enough 6 months. So go down to the weekly chart. Again, we had a bull flag form, then a breakout to the upside, a bull flag forming underneath this 200 period moving average. Again, we're looking at the higher lows. So, and we are breaking to the upside on a weekly chart. Where did we open this week? Because on the monthly we are bullish. We open at 32.37. Anything above that, we're looking for buys. Currently trading at 132.79. So it is bullish on the monthly and weekly, which is a strong indication of going long. This is unlike the euro pound, where it's somewhat contradictory. Where the monthly, if you look at the trend on the monthly, it is long, but we're trading below the month's open. We're also, if we did trade below the week's open, we're definitely looking at short positions as we've had that much alignment, even though the trend is to the upside for the euro pound. But we're talking about the euro yen now, so let's stay on topic. On the daily, as you can see, we are trading above the day's open. We are moving outside the Bollinger Bands to the upside, but we are moving outside the Bollinger Bands to the upside, so we might have a day of a bit of a bearish day with a pullback, but we're still expecting this to be long positions, euro pound. And so go down to the execution time frame. You can see we've gone up to the top of the Bollinger Bands, sold off a little bit. We're just waiting for a long signal. Let's see when that long signal that came in. Let's see when that came in. Was that last night? 15th? No. When was this one? That was on Friday as well. Yep, so we're just waiting for long signals on the euro yen. We are in multiple time frame alignment, monthly, weekly. So we're looking for long signals there. Because we have the three things. We have the overall trend on the monthly. We're looking at the month's open. And we're looking at the week's open again. So we have those three areas. Well, those three factors we want to be in line. Now, let's see. As you can see, I've not eaten breakfast, which is not good. And so if we go to the pound yen, we expect a similar story to the euro yen because they're highly correlated. And plus we've had pound strength as we've seen against the dollar and the euro. Now, pound yen. As you can see, we've come all the way down, tested that. Let's see, this is a monthly chart. Well, this is 2012. We don't need to go all the way back down there. Let's see more recently. Pardon me. Most recently, the lowest we've gone in and around Brexit has been all the way down to a low of 124.78. Okay. 124.78. Now, when we touched, after we've made that low on the monthly chart, we've had the very next month a really strong performance, really, really strong. Now, you see, this is where the overall trend would be negated by the current market conditions. As you can see, if this was November last year, if we would have looked primarily to the downside, this large candle that was forming, which somewhat contradicted your trend, we would have been cautious in taking it as it was trading above the month's open. Now, if we took short signals, despite the fact that the month's open was somewhat in the rear view, it would have been very costly. Now, that's the reason why I take the month's open, because it shows you how the candle's forming for the month. And if you'd have taken the month's open and says, well, that's in an uptrend, and then again a week after that, you're trading above that week's open as well. You have the multiple time frame alignment in this sense, despite it not being in line with the trend. So the third variable is not in line, but you have two of the most important ones in line. You've traded to the upside, which let's have a look. So based on that candle opened at 128.31 and it went as high as 143.25. So you're looking at near enough 1,500 pips in a month of movement to the upside. So we've come down, had a large move to the upside. We've had a pullback right there. We've had a pullback to test that. Oh, that's incorrect, isn't it? We've had a pullback and we've just had a period of, you would say, near consolidation, but it's a small move. Well, it's a grind to the higher side. Now, this month, as you can see, this month in September, we have had a pretty large push to the upside, currently trading at 150.87. 150.87. So it shows you that there has been a turn in the pound. We've seen it strengthen against the euro. We've seen it strengthen against the dollar. This is all, well, my understanding of the fundamentals being that the pound, there is anticipation that there will be pound strength based on the fact that the Bank of England have made murmurings that they are looking at raising rates. Now, obviously, if they don't raise rates, we'll likely see a bit of a sell-off in the pound, but I'm not a fundamental trader, so I'm just going to trade what I see. As we've seen, the pound is trading above the month's open, which is bullish. As we've seen, we've not gone near the lows. So that's it for the monthly chart. Let's go down to the weekly. The previous week, as you can see, very large candle to the upside, very large. Pretty, yep, it's just an engulfing candle to the upside, closing near its highs. Now, this week, let's see where we are. If we opened at 150.51, so all trades above that, we are looking to buy. But a large move like we've seen the previous week to the upside, we might get a bit of consolidation, bit of a pullback, a little rest from the balls before continuation up to, is that 160s? Yeah, up to the 160 level. In and around, yeah, in and around that 160. Yep, in and around 160. So, but then again, the fundamentals could be so strong that we don't get a pullback. As long as we trade above that 150.51 level, we are looking for buy signals. Now, if I go down to the hourly, I've not had a look at the daily, but the daily is going to likely be in line with the weekly anyway, because we already have weekly and monthly alignment. So the daily isn't somewhat so important, but let's see, go to the daily. Again, on the daily, we have broken out of this 147. We've had a bit of a range of that 147, let's just say 147.30, in and around that region there. Because if we look at it over here, which was December last year, 2016, we sold off from that level. We also sold off from there in May, and again in July, August. So price has come up again, tested it, finally broken out to the upside. Now, so we do expect a continuation to the upside, but if we are looking at a retracement down to the 148.46 level would be an area I'll be looking to get in long if we do get a heavy retracement. If we go down to the 60-minute chart, again, you could say this, does appear to be like a small, like a bull flag formation in reality. Now, if you look, see there was a buy signal there, which was 4 a.m., 4 a.m. on the 15th last week. Well, you would have been awake to trade that, right? Unless you're trading the Asian session. Now, as we've seen, prices come into this bit of consolidation, which can be expected after a large move to the upside, a bit of consolidation, pulling mean reversion back to the moving average. We could get that pullback down to a 148.46 level that I mentioned, although there'll be a pretty heavy retracement. You might pull back to this moving average here, so to 149 before a continuation to the upside. Now, that's it for the 60-minute chart. So the pound yen this week, like the euro yen, we are expecting buy signals. Let's come off that. Next move, next currency I am looking at would be the US dollar Japanese yen. US dollar Japanese yen, let's just have a look. Again, with yen pairings, we'll be looking for something similar. Although we have had some dollar weakness. We've had some dollar weakness. So this might be range bound, but in all likelihood, US dollar Japanese yen is a popular pair around news events. So we expect more of an idea of the move that's likely to play out. We do expect to see that on Wednesday with the Federal Reserve interest rate decision. I could imagine they were going to leave a statement as well, and it should give direction to the US dollar Japanese yen pair. Now, what have we? Let's see what we've got here. Now we've had, it was 2010, 2011. We've gone through that plenty of times. Had a large move to the upside, up near the 125 levels. We've sold back down to the 100 level. This is on the monthly chart. It's 2016. We're going all the way down to going back all the way back to 2016. Large move to the upside. Pretty strong candles here, especially this monthly. Let's just have a look when that month was. Let's see, when was that month? If only my stylus would work the way I wanted to. Anyway, it was November last year, so in and around Trump's election. Large move to the upside on the US dollar. We've had another push in the month after it. Then the candle that preceded, the bearish candle, was engulfing. It tested at 118.61 level, and it was bearish. So we've had the move slowly going down. Not with much momentum, you'd say, because we've had wicks to the upside and downside, which shows there's a bit of indecision. And yeah, because when it did come down, I was expecting to be a bit of a bull flag and then a further move to the upside to that 125 level, but hasn't played out that way. It's been a very strange. It's been very strange in that it's gone up, it's gone down, it's gone up, it's gone down, but we just base our trades based on the monthly open in relation to it. So currently this month in September, we are currently trading above its open, despite, and this month also we did go and test new lows, but we were bought back up, which suggests there are buyers of the dollar. We went as low as 107.31, and we are currently trading, should be above 111. I'll have a look at that when we go down to the lower time frames. So we're trading above the month's open. And yep, we're looking for buy signals. We're trading above the month's open. Go to weekly chart. Last week, again, there appears to be, what happened was, let's see, where did we close there? We closed, the week before that, we closed at 107.83, and this one opened at 108.16. So we gapped up, which is bullish, and as you can see, the gap up was ran. And what I mean by that is the price just ran up from where it gapped up, so it didn't go all the way back down. It just continued to the upside. Now, currently this week we have opened at 111.05. So anything above that area there, I'll be looking for buy signals. Now, you would think, yep, I'm looking for buys at 111.05. As you can see here on the weekly chart, would have expected a bull flag break to the upside, but no, price has just ground its way slowly down, pushing up, making lower highs, in some cases lower lows, but it's not had a strong trend even though it does appear weak to the downside as we've had lower highs. If we go down to the daily, oh my, have we kept up again? So the 15th, let's have a look. The 15th, we closed at 110.83, and the 18th, which is today, 110.83, we've opened at 111.05. So it does appear that we've gapped up again, and yep, which is bullish. So a test of, I'll be looking at a test of the 1160 level, and after that to the upside, we do have, this is based on daily chart, we do have the 200 period moving average around that 112.20 level, which will likely come down a bit. 112.20 level, but providing we have momentum through that, we're looking at the 112.52. From there, we'll likely be looking at right there, 114.30s, where price previously swing downwards. So there are some areas of interest above. There are some areas of interest definitely above, and so we do expect it to go up to the 1160. That should be a pretty easy target to reach. Then after that, if the momentum continues, to 112.50, provided we successfully navigate that 114.30. Now, so yep, we are going to the upside because our weekly chart is, we are trading above the weekly. The weekly open of, let's get that right, on 11.05. Where did this week close? 83. Oh, 83. So we gapped up. We do expect further move to the upside. So could be just market participants pricing in the Fed activity. So go down to the 1 hour and see where we are. The gap's more clear here. Yep, the gap's more clear here. Right there. To the upside, you can see strong move to the upside on the US dollar Japanese yen. So we are looking for primarily buys this week, and should be the next currency should be the US dollar CAD, which was in a very tight range last week, which was somewhat annoying, but doesn't look much better there on the 60. But let's have a look at it on the monthly first. Let's see where we are on the monthly time frame. We are currently in bearish territory. So let's have a look. We had a large move to the upside. We've posted a lower high. We posted a lower high, which is bearish. We had this, I think they call it a wedge, and we've broken out of it to the downside. So basically, it was a contraction of, somewhat bit of a contraction of volatility there. Prices just seemed a bit indecisive, and he decided, yep, it's going to break to the downside. Now we had a strong candles to the downside, closing near the lows, large-bodied candles. Currently this month, we are trading below the month's open, and it's in line with the primary trend, which is to the downside on the monthly chart. So the previous, let's see, what month was that? It was August, wasn't it? Let's get that right. Let's make sure I get this right. Yes, August, we did have a push upwards, but it was sold back down. We did have the push upwards, but it was sold back down, suggesting that a lot of people are still bearish on the dollar against the CAD. Now, the 120 is an interesting level, should be aligned with the 200 period moving average on the monthly chart. That's just going to be like a psychological round number, as we've seen with the euro dollar. Let's go down to the weekly chart, because we're looking to have multiple time frames align. Last week actually finished bullish, surprisingly enough. And after the large move to the downside, as you can expect, dead cat bounce and all the rest of it. Small candle, which suggests that it was a tight range. So if we look at the open to the close, so it opened at 121.55 and it closed at 121.96. So you're looking at 41 points. So 41 points to the upside, which is pretty tight for a week's worth of price action. But yeah, we are primarily looking for shorts based on the monthly chart. Currently this week, we've opened at 121.90. 121.90. So we're looking for price to trade below the 121.90 to take short signals on the US dollar CAD. If we go down to the daily chart, I think the downtrend is going to be more pronounced. As you can see here, we've broken out of that wedge that I drew on there, but this wedge was drawn on there long after it already broken out. So, it's a bit of, hindsight bias. Now, if you look at the daily chart, we did have where the price went below the 200 period moving average, which is this blue line here. It did come back up to test that 200 period moving average, and it pretty much immediately sold back down, had a bit of retracement, and sold back down again. So even if you were just based it on the 200 period moving average, as you can see, it did break below it, tested it, and then went all the way down. So that's on the daily chart. So even if you weren't using the wedge, or you couldn't see it at the time, there you are. You got your moving average, and price has reacted to it, not in a positive way, and it provided a tremendous shorting opportunity. So we're currently in a period of consolidation here on the daily chart, but we are posting higher lows. So we've not retested the lows around the 121 level. The previous day was bullish. And we've not had any tests to the downside, but our primary objective is to trade this pair to the downside. And if we are taking any cautionary long, it would be reduced risk, but it would be really risky. I don't know how to get this up the chart. It would be really risky to look at taking long position, possibly until we get an idea of what the FOMC Fed wants to do on Wednesday. And we have to see what happens with oil as well. Although oil has been strengthening. So, yeah, US dollar CAD below the 121.90. We're looking at short positions. Above it, cautionary longs, but it'd be very dangerous to take longs at this moment in time, as it would be in contradiction to the monthly time frame, which is strongly moving to the downside, and we are not trading above the month's open. So yeah, that's it for dollar CAD. We're looking for short positions. Let's get that back to a 60-minute chart. Let's get that back to a 60-minute chart, and change it here. Change it to a 60-minute chart. Now, I'm just going to go over and have a look at oil and gold. So, I'm just having a look, just waiting for the charts to load up. Ideally, I should have done this analysis Sunday night, which was pretty much, as you know, yesterday, but I didn't do it. Although we tend not to have large moves on a Monday anyway, unless there's a strong fundamental news over the weekend, like, I don't know, North Korea testing more nuclear devices, more strong rhetoric at the US in relation to that. So we tend not to get large moves on Monday. We tend to get consolidations. Now, let's just have a look at gold. Let's have a look at gold. Right. So if we go to the monthly time frame, okay. On the monthly time frame, if you look at it, you would say we are moving into bullish territory on gold. Okay. Now, this chart has gone all the way back to 2009, 2011. Obviously, we've made those new highs around the 1900 level. We've come down, slowly ground our way down to the $1,000 mark, and we've pushed up to 1300. We've pulled back to the 1000. What do you say, 1100, and we're pushing up to go and test those highs. Let's just see where those highs are. Let's have a look. 113.75. So those are where those highs are, around at 113.75. Now, currently for this month, we already had a push to the upside, but we have sold back down. We did go as high as 113.57, but we are going back down. Now, obviously, we know there's a relationship between gold and the US dollar, with news expected to come out this week by the Fed. If it is dollar bullish, we could potentially see more selling of gold, but we've seen in the past sometimes gold just ignores dollar bullish news, and it also goes up. So sometimes it's sold in anticipation and then brought back up once the news has come out. So I'm just going to base my decisions based on the monthly chart. So the monthly open, Euro Consumer Price Index. Well, I've already. Let's get this. Okay, I've got an alarm going off. Now, let's see. Now the open was 113.20. We're trading below that at 113.15. So you could argue that despite the fact that we're meant to be in an uptrend, the fact that we're trading below the 113.20 means that I would be looking at trading it to the downside, particularly if the weekly was in line with it. Now, let's just have a look, see where the weeklies are. Let's see, the weekly chart. Let's have a look. On the weekly chart, as you've seen, we've come up to this moving average, tested it, and the very next week after it has been a bearish week. So it will likely suggest that this in and around that 113.60 level, around that 113.60 level, because we've got the swing at 113.75. There is some selling pressure. Now this could play out as a bull flag. Price possibly coming down to the all the way down to these highs down here, around about at 112.96. Some consolidation before a break to the upside and a possible touch of the $1,400 level. So we have to wait to see how that transpires and how that plays out. So, but as we're trading below the month's open, we're looking for the weekly to see if we're trading below that as well. This week, where did this week open? This week actually opened 113.20. The month opened at 113.20.31. This week opened at 113.20.24, which is wow. It's within a couple of cents, literally within a couple of cents. Now, it's within a couple of cents. Oh, there's no way that can be right? Let's just double check that. Absolutely. Well, that'd be incredible if that's right. Let's have a look. Where did he open? 113.20. Yeah, that was correct. And this week, yep, 113.24. Okay, couple of cents. As we're trading below it, we're looking for primarily short positions, even though the longer term trend does appear to be shifting to a buy. As long as we trade below the 113.20 level, we are looking for potential shorts, as we are below the monthly open. We are below the weekly open. So, yeah, let's just get that onto the charts. Let's go down to the 60-minute time frame. It's a pretty small candle, so I wouldn't expect any signals to have come. Would have come. Yep. So the last signal was Friday. So as you can see, the 113.15 level, we're likely to have to wait until we see a pullback before getting a signal to go short and taking that signal. But we are acutely aware that we're within $5 of the monthly and weekly open of 113.20. So we trade above that, we're looking long. Trading below that, we're looking short, as we'd have the multiple time frame alignment, but not the long-term trend. Now, so that's my current position on gold, US dollar, but I'm not expecting a large sell-off in gold. Obviously, I could be wrong, because I think the market's somewhat priced in the Fed's likely, what would you say? They've likely priced in what they expect the Fed to do. And unless the Fed does something which hasn't been somewhat anticipated by the market, we do expect the market to continue to the upside in terms of the gold US dollar. So that's my position on gold US dollar. Let's just get that down, and yeah, let's have a look at oil. Actually, let's have a look at oil. Let's just have a look at oil. US oil. This should be WTI. US oil. Let's see where we are. 60 minutes, as you can see. No guessing where that's going. Now, US oil. We are currently, let's see, let's just see. So it was argued, could have been argued, could have been argued that, as you can see, I have not drawn it on my chart, but the technicians amongst us would have likely said, aha, this is a wedge. This is me drawing it after the fact. All right, so when you do things after the fact, they don't hold much weight, because it's like a hindsight bias. It's like, saying, oh, everybody can play the right lottery numbers a week after the draw, because, you gotta know what the draw is. So, as you can see, I think that's one of those wedges that they keep that a lot of us see in a lot of videos, wedges, and we've broken out to the downside. We've had that price consolidation. We've had a price consolidation, a price squeezed and broke to the downside. Look at that, really strong candles closing near the lows to the downside. So everybody was short oil from around, let's just see where that was, around $94 a barrel. Whereas, yeah, they did pretty well. They did pretty well. But that's in the past. Let's just have a look where we are now. We've had oil go all the way down to $26 a barrel. Not sure the exact number. Let's have a look. 26.08. We've got the price. How low did we go over here as well? Went to low as 33 over here, and that was 2009. That's quite a bit away. So we're now 26, and that was that in 2017 or was that late 2016? It was 2016. Yes, 2016. We've had a price come up, consolidate, and appears to be going to the upside. So it does appear that the oil market is moving to the upside very slowly on the monthly chart, but it does appear that it is moving to the upside. Now we can expect to the upside. Primarily me. Possibly $55 a barrel to be somewhat resistant. Above that, you'll be looking at possibly $63 a barrel, in around between around 63 to 65. Expect some resistance there, but we're quite a way away from there. We're on this, you could argue, on this monthly chart, as you've seen, we've come up, pull back, come up. So we could say we've got a higher low. So we've got a low there and possibly a higher low there. Now, I'm primarily looking at the monthly chart for where are we in relation to the month's open for our sense of direction. Now, we open at 47.05 and we're trading in the 50s now. So we're trading above the month's open, 47.05. So we are looking for buy signals. And let me just go to the weekly time frame. And as you can see, in the weekly time frame, most of the move for this month has actually come last week, like a lot of the currency pairs previously analyzed. A lot of the move has come from last week. As you can see, prices come up slowly move downwards, but with the wicks to the upside, suggesting there are buyers in the market, suggesting that there would likely be a bull flag playing out. And as you can see, we had a little inverted hammer, and immediately following it, this was on the weekly time frame again, so it did push up and was immediately sold back down, and it was bought back up. So the previous week it opened at 47.54, which was pretty close to the month's open, which, like I said, most of the move started last week. So 47.54, and it went as high as 50.47. So you're pretty much looking at a 300-point move. And yeah, we are testing these highs over here from July, which were at that 50.40 level. The move into it, the strength of the move into it suggests that we are likely to see a break. We see a break of that. We're looking at 53.24 and then all the way up to 55. Though I'm currently looking at, based on the weekly and the monthly chart, looking for buy signals on oil. I don't know why I would look at a daily, but I'm going to look at it anyway. As you can see on the daily chart, we've gone down, tested that 46.44 level, gone beneath it, had a strong candle closing back above it, and we're above these moving averages here. Price has gone up to near that 200 period moving average, sold back down. It would have got a lot of people scared, and the next candle that preceded it was a bullish candle. When usually you don't have a follow through, suggests that I usually interpreted it. I always interpreted moves that were that were counter to the trend, that was not followed through on, i.e. the next candle did not go in the same direction. I've always interpreted it as just like an impulsive move designed to get a few people out of the market. So you could argue that you could take that position with a stop below its low, because if your trend's below is low, then all that is a dead cat bounce. So if someone did take a long position based off the candle which closed on the 11th of September, it closed at 48 with a low of 47, so it'd been about $1 of stop. It would have been about $1 of stop. Yeah, there was definitely at least $2 and a couple of cents worth of momentum for you. And yep, so we are moving to the upside. 50-40 currently, area already mentioned, is on the daily chart. Is an area of interest, whether we're going to come up here and reverse, go all the way back down to the 47s. But due to the momentum into it, I do expect it to break for a test of, as you can see on the daily chart, and I can see the level a bit better. 50-22, followed by 53, 54, and all the way up to 55. So those levels just previously mentioned, they'll likely provide some sort of resistance, but we might just consolidate underneath them, make a bull flag, then break to the upside. And let's just go down to the 60-minute chart to see where we are. It's not likely we got that signal this week. Let's just see. Oh, matter of fact, we did. We did actually get a signal this week. Yep, 2 a.m. We got a potential buy signal right there, 2 a.m. Candle closed at 87. We're currently trading at 18, so it's good for it's about 30-ish cents of price movement. And yep, so oil, we're looking for a buy above. Let's get those numbers down again. Looking for a buy above. I really need to eat something. Need to get a buy above 49.82. That's the week's open. Okay, 49.82 is the week's open. And I did say the month's open was around 47, didn't I? It was quite a bit away. It was, yep, 47.05. Yep, so we're looking for a buy on oil as well. So looking to buy oil, buy gold, buy a pound. There is a lot of buying going on this week, but we have to bear in mind, obviously, the FOMC, despite the fact that we don't trade, the FOMC news. Now, US 30, which is a Dow, look at that on the 4-hour chart, it's clearly an uptrend. But let's just have a look at it from the higher time frames. So, one thing about the stock market is it is long biased. What does that mean? If you take long positions, well, this is my interpretation of it. This obviously does not, hopefully this is not destroying my mic. This, hopefully the audio quality on this video is pretty good. This, what I mean by this is pretty simple. A long bias. If you look at it over time, the market goes up more days than it has down days. So it accumulates more going upwards than it does downwards. Obviously, how you have your downtrends, like for example, around this 2007, 2008, all the way down to 2009, where it reversed. And if you look at it from 2009, we just say this is monthly. So that's March 2009. If you look at, if you bought it from around there, around the April, and you'd continue to hold your position, you would have had tremendous return. Absolutely tremendous. Now, like I said, the market tends to go up more often than it does. If you look at the charts, if I zoom out a bit, see, oh my, it's all the way back to the 1970s. Wow, I didn't even know TradingView had that much data, but they do. So if you look at it even from the 1990s, The largest moves have been to the downside. You've had pullbacks to the upside again. A large pullback, 2007, 2008. A pretty large pullback. But again, the move has been to the upside primarily. So there is a long bias to the market. If you look at it in a monthly in relation to this, even like 200 period moving average, it doesn't oscillate around it. It doesn't go up but break it, above it, below it, above it, below it. Nope, does not do that. It tends to stay most of the time above a 200 period moving average. This is obviously on a monthly, but everybody like, well, come on, let's be honest, mate. There's only... So, yeah, like I was saying. So, it's primarily long biased. Obviously, you do get your shorting opportunities here and there, but there are more long opportunities than there are short opportunities, and the long opportunities are likely to accumulate you more than the short opportunities. Although the short opportunities tend to play out quicker, like a move of say several thousand going short will likely be done in a shorter period of time than say, I don't know, say 5,000 going long. It's like 5,000 going short. A 5,000 point move to the short side will likely be achieved quicker. Get your thoughts together. Be achieved quicker than a move to the upside of 5,000 points, because it's just a common saying of, the markets move up the stairs and then fall down elevator shafts. So it walks up the stairs and then fall down elevator shafts. So it goes up slowly and goes down quickly. Now, so if you look at a monthly chart, we're looking bullish. Let's just see where we are for September. Where did we open? We opened at 21,000. Oh, get this right, mate. Get it right. Let's just get this right. So let's get this started. This is getting my last nerve now. 21,968. So anything above 21,968, we are taking long. We're currently trading at 22,323. So the monthly chart, we're looking bullish. Moving average, everything's looking bullish. Open, in relation to the open, we're looking bullish. Go to the weekly chart. See where we are. Are we trading above the week's open? As you can see, last week we had the largest positive move. Like with a lot of financial assets, this week we are looking for longs above 20,256. 22,256, and we're currently trading at 20,323. So quite a bit of the move has actually happened overnight, which is pretty good. Like, if you were trading Sunday night or Sunday evening, depending on where you are based, yeah, you'd have accumulated some points right there. So 22,256. Anything above that, we're looking long. So we've had a look at the monthly and the weekly. I suppose we don't have to look at the daily, but again, on the daily, if you see, if you have a look, we've had move downwards, a bit of consolidation, pretty large candle. I suppose you could term it a golfing candle. There on the 11th of September, and every subsequent candle has since been a bullish candle. The price has always closed above its open. And again, this candle here on the 18th, let's see, on the 18th, which is today, we've opened at 56. We're currently up at 323. So, yeah, we've definitely got a bullish bias on the Dow due to multiple time frame alignment. MTFA, multiple time frame alignment. So, yeah, we're primarily looking for buy signals on the US. Oh, what was that? Oh, I deleted something on the chart. I'll put it back on later. Yep, so we're looking for a bullish signals on the US 30. Interesting to see how the FOMC will affect it, but we are long biased on the US 30. So that should wrap it all up for my analysis on majors, commodities, primarily gold and oil, and the one index, which is the Dow 30 or the US 30, however you want to term it. So yeah, that's it, and I'll be doing a few more videos either later today or tomorrow. We're looking at probably some minor pairs. And yeah, bid you all a good day and a great trading week.